tick around 700 points for a better part of the trading day today, which is a great thing. It's just sustained this. If you look at the intraday of the Nifty, sure, it may have come off a little bit, or maybe the advanced decline may have contracted a little bit, but largely you see this stability in the markets today pretty strong, which means that there has not been too much of selling that has happened. Bring up the mid caps and the small caps for a moment before I get to the heat map, and we should try and also pull up the India VIX, by the way. That's the other part. So 3% for the mid-cap index, and the small-cap index will also come up on your screen, and probably see about 2%, not as strong as the large caps have, but that's to be expected on a day like this, wherein large caps would first take center stage. Over a period of time, the mid caps and small caps will come to the fore. VIX has come off, which is also great. And if you look at the Nifty 50 heat map, maybe one or two stocks in the red, or is there more? Actually, a few more than what it was at the open, because at the open it was only Eicher Motors. Now, Eicher is still the top loser, but some of the IT stocks are still there, kind of meandering between the red and the green. But the gainer list has almost said the same. Adani Port was the top gainer when we started off the day. It's still up about 10%. Power Grid was the second best performer. It still is. What has surprised with its move and the ferocity of the move is State Bank of India, because we were talking about how PSU banks have had a really good run all through this year. Private banks haven't, and private banks should participate. Now, will they participate tomorrow is the key question, when the final numbers are out and the FI money starts coming in. It's a presumption, of course, but that comes in. But SBI, big day, and PSUs per se, because you look at SBI, Power Grid, NTPC, ONGC, it's filled with PSUs, the list of gainers today. So very strong day. Like I said, Tamanna and Sabina, you could find a fault here, a fault there, but frankly, there is not enough to be pessimistic about or sad about with the kind of move that has come out, except, of course, if you are short and you're licking your wounds.
Yeah, I mean, that would really be a bad place to be in. But the one number that I would bring your attention to is 365. That is the average NDA number after the poll of polls. In all likelihood, you are going to exceed it. If you exceed it, then even this might look conservative tomorrow. So be prepared for that kind of an upside as well, is what I would say. As you get into the closing trade session, you are looking at a very, very exciting day. You know, I would say picture abhi baki hai, party abhi baki hai. And let's pull up the sectoral indices, because, you know, we covered the broad indices. I think it's a great way to figure out what really is working and where the sectoral indices are this afternoon. And it's all about probably SBI. They're contributing the heavy weight to the PSU Bank Index, but PSU Bank, PSE, Energy, so old economy facing reality, again a good sort of proxy for economic gain. Remember, there are multiple things for the markets to cheer, and it's not just exit polls. I know our focus has been heavily on exit polls, but your GDP data was phenomenal. It came over the weekend and maybe got drowned in the exit poll number noise, but 8.2 for the last financial year was beyond what was expected, and you're seeing some of that also play out apart from the policy continuity theme as well. I want to pull up the advanced decline ratio for the day just to give you a sense of what kind of a day it has been overall. And it's just a beautiful chart over there. Even right now, the advanced to decline, looking very strong, nearly 1:3 over there. And we'll have to wait and see if you see some last minute magic during closing trade right now. We'll obviously be focusing on all of those points. Last bit, I'm just going to pull up the top gainers and losers on the S&P, the BSE 500, just to give you a sense of where all the action is. And you can see Adani Power and Adani Ports here, but frankly, that is part of the big story, right? Across the group, the market cap has now overtaken pre-Hindenburg levels as well. So a big boost there. That definitely is a big part of the story. PFC, REC has come in very strongly, and then you have a smattering of real estate players in the form of Prestige, etc. Now, on the losing side, Godfrey Phillips, that's because of the family feud which has been going on. But if you see Pharma as well being spotted there, GSK, Fortis, Jubilant, that entire space not doing too well today. Zydus as well, BKG may be pulling off, and some of those themes. But even at the deepest end, 6% down, nothing to speak of the kind of gains that we've seen in real heavy weights today. This is a sea of green, I would argue, Samina, with relatively fewer spots of red.
Yeah, the only red that stands out is the wicks. That's actually the only thing that's declined substantially for good enough reason. So that's again a positive. The India wicks has done 17% to trade closer to levels of 20. The breadth of the market's solid. The PSU index itself is up nearly 9%. So that just goes to show you the kind of euphoria that the street is currently witnessing. And from the look of it, there's more to come, and that's what we do believe as well. Across stocks, pharma and IT are the only underperforming spaces in the market. And when I say they're still in positive territory, but there's relative underperformance in those two baskets of trade. On the winning side, even Reliance Industries has played a good catch-up. Remember, there's been a cut in windfall tax, so all your oil and gas names are looking okay. HPCL, BPCL, IOC, RIL is up 150, about 5% in terms of gains. Well, you've got all your defensive names, so HAL, BDL are also looking very well placed. PSU banks, so beyond SBI, your Canara banks of the world, Bank of Baroda are all trading well. The PFC REC twins are also doing well in trade. PFC, which has been touted as being a very expensive stock, ignoring every form and concern on valuation, sees a gain. Both of them, REC and PFC, are both up 12% in trade. Bank Nifty is up 4%. Banks like HDFC, interestingly, are seeing a little bit of underperformance. But all in all, it's looking like an extremely fantastic close for the street. Abhay Agarwal now joins in, founder of Piper Serica, to talk to us about his view on the markets. Abhay, hi, afternoon. Thanks for joining us. Abhay, is the reaction today, the exit poll outcome, far better than what you were penciling in?
Yeah, good afternoon, Samina. Yeah, I think, look, we were confident that whatever is the poll outcome is not going to be very negative and investors will look beyond election at some point of time. So we have been fully invested and we have been discussing this also. Today's reaction, I think, I would call it better than I expected, but it is basically a reaction to an exit poll which is very consistent. So, but at the end of the day, these are exit polls. So I think today's sharp run-up that we have seen of about 3% in the broad indices and selectively stocks have done much better is purely a catch-up rally driven by exit poll numbers. And I think this is not going to stop here because if the exit polls turn out to be correct or the actual numbers are even better, then I think this rally has further legs to run tomorrow and thereafter, because there are a lot of investors who have increased their cash allocation in the portfolios over the last month or so. And now they are feeling a little left out, but they still don't have the confidence to come back right now. They want to wait for the poll results. So I think that's why it gives me the confidence that this rally will probably continue.
Yeah, it's over 3% up move that we've seen from the get-go this morning. We will find out soon, but do you get a sense that the FI short covering is still not started and all that we've seen today is largely driven by domestic investors and institutions, which then of course means that another 5% up move tomorrow is a very, very likely scenario?
Yeah, I think FPIs were hedging their portfolio. They were not short for the reason of being short. So I think a lot of their shorts were driven by the desire that, look, there's a big event coming up and we should hedge our portfolio. My guess is they would have covered a lot of those shorts today because of the certainty that the exit polls have already brought in. But as I said, there is a lot of cash that is still to come in, that has been sitting on the sidelines waiting for this event. And once by midday tomorrow, we know largely the number by, for sure, I think that cash will also start dripping in. And that will then go into stocks that haven't really performed well, but are a good play on India's economic growth over the next 5 years. So today, if you see, it's the market darlings that have been faring extremely well. The PSU stocks, Adani Group stocks, they have been the market favorites for a long period of time. So not surprised to see the euphoric reaction to them. But I think the rest of the participants in the market that haven't participated, I would expect them to start the rally to broaden to include them over this week now.
Abhay, good afternoon, and thanks for agreeing to join at such a short notice. Really appreciate. Just wondering, Abhay, what happens next in terms of when the global participants deploy their money. You speak to a lot of such people as well. Would you reckon that they would go for the private banks and the ITs which are heavyweights, or will it be a lot more selective? And part two, if you had some cash, where would you look to deploy? Because it would have been difficult to maybe just make a fresh deployment with the Nifty being up 700, 800 points, right? You want to take your time, look at some of this. Because I remember you saying, Abhay, that people may not have put in the money, but they have the lists ready.
Yes. Yeah. No, absolutely, Niraj. First of all, always a pleasure to talk to you. I think I would break up the large financial foreign investors into two parts. One, that try to mimic the index performance as much as possible, because they're not stock pickers. So they stay with the large caps, and those are the guys who have been largely invested. And then there's the second segment, which are more stock pick driven. And I think those are the guys who are deploying their capital now, because they like to generate an alpha by going beyond the large indices. And I expect the flows from them to continue to come. The passive flows will definitely come, because with this event, India will get a higher allocation in the MSCI index, plus other passive funds will get in their capital. But I think the alpha-seeking funds that do stock picking, they have had their buy list ready, and that buy list largely focuses on India's domestic consumption, India's domestic capital formation, infrastructure, capital goods. I think that is a big story. And I think you're seeing that also play out in some way today, by looking at some of the PSU banks, PSU companies, Adani Group stocks that focus on infrastructure, Reliance. So I think India is a stock pickers market. People get distracted by looking at the Nifty valuation and saying whether 18x is right or 19x is right or 20x is right or should it be 16x. But really the money in India has always been made in stock picking. And I think the investors who do that well, are closer to the ground, are focusing on now next 5-year story. Where will these growth stocks come from? So I think the focus will go back to seeking growth and staying away from, so-called value stocks.
Hi, Tamanna here. I'm just going to ask you the one question I'm getting from everyone this morning, including, friends, people who are just trying to understand what is happening and might not be so tuned in every minute to the stock market. Some people may have taken some profits off the table after seeing a very good upsurge. Some are sitting on cash, getting excited by the headlines that we are showing on the markets and wondering whether they should be any kind of deployment over the next 48 hours, 24 to 48 hours, or should they just wait on the sidelines? If they have to put money in, what to pick?
No, good afternoon, Tamanna. I think the question is best answered after knowing what is the period that an investor is looking to invest for. And if I assume that the investors you're talking about are looking to invest for 3 to 5 years perspective at least, then really it doesn't matter whether they invest today or tomorrow or day after, but they should be fully deployed, because the way just driven very, very top down, 8.2% GDP growth rate, and then you build further alpha on that. You look at the broad indices themselves returning about 15% IRR over the next 5 years. And if you build a further alpha from stock picking or picking your investments well, you can easily get to 18 to 20% IRR, which is better than any other asset class. So the question for investor is, look, what are your how long are you looking to invest for, and what are your other options? So if the answer is other option is fixed income or some safe investment, and they're looking to invest for 3 to 5 years, then absolutely it doesn't matter whether they buy today, tomorrow, or anytime during this week. I think there is enough money to be made by being an intelligent investor in this market.
Just one follow-up to that, Abhay. Would you now, see greater comfort in some of your blue chips, your large caps, looking at the kind of run-up you've already seen in the broader market and small and mid caps?
Oh, yes, absolutely, Tamanna. In fact, we had a couple of months back when we did our last model portfolio rebalance, we had increased the allocation to large caps to 55% from 35%, because we are seeing better value there. While India has always rewarded mid-cap and small-cap investors who have picked their bets carefully. I think at this point of time, the mid and small cap space generally is very expensive. There are, of course, spots there, that we are always looking at. But overall, I would say large cap space is very, very juicy right now, because these are the companies that have the ability to scale up exponentially over the next 5 years. They have the balance sheet quality, they have the management quality, distribution, brand name, everything, and they are all mostly well priced. I would say that many of them have gone through a 5-year, 3-year time correction of pricing also.
Right. I mean, I'm going to attempt asking you a question, which is probably what a lot of investors might be considering or doing right now. At this stage, there could be enough and more reason for investors to go back and rebalance their portfolio, largely on back of how some of these stocks have done and hence funds have performed. So your debt equity allocation would have changed significantly in the last couple of weeks or months. At this juncture, do you do a market neutral switch? What I mean is, from the broader market stocks, you move to your frontline names, or do you do an exit at this stage and do a staggered re-entry into some of those options or opportunities in the large cap space that are available?
My experience, Samina, has been that for a long-term investor who's not very close to the market and doesn't have the time and wherewithal to do stock picking, it is always a good idea to allocate to funds or professional managers in a staggered manner. I think what that does, it takes care of the market volatility. And we have seen, the SIP investors have been very steadfast and have really benefited from the strategy of averaging their acquisition price while maintaining their overall allocation. So my personal view is that even if you are a very large HNI investor or a family office investor, it is good to allocate to equity in an average manner over months, and that's what we have also been doing with the new money that we have been getting. That we are averaging our buying over 3 to 6 month period rather than buying everything at one go. I think that cuts down the volatility, averages the acquisition prices pretty well.
In terms of sectors, Modi stocks have relished and ran up significantly in the last 3 to 6 months, be it defense, infrastructure. We've talked about this in the past. But what does one do? If you're looking at fresh buys, do you go after very expensive policy-focused stocks such as defense and infrastructure, or do you go after relatively cheaper counters where there is a lot more value? Now, outlook may not be as promising, so stocks in the chemicals pack, stocks in IT. Is that a space as well that you'd consider going overweight on this stage? Because if the market's got to move up, everyone will eventually start moving up, right?
Yeah, I think you're right. I mean, as they say, rising tide lifts all boats. So that is bound to happen. But again, in such a large market, there are always opportunities. There is a segment of investor that has done very well chasing the popular theme, and I think as long as that continues, why not? So I don't want to be judgmental about anyone's investment capability, because I have seen people do very well just doing one thing, which is staying close to the momentum and focusing on what has been working. And then there are investors like us who look at what is going on, what is the momentum play. We play partly in that, but we're also looking for opportunities where the market hasn't overpriced the stocks, and we can take a 3 to 5 year view and make our money off it. And I think there are, as you mentioned, sectors like that. Non-ferrous metals is emerging as another very good space. Where the companies really haven't done well. But if you look at aluminium, copper, tin, nickel, zinc, silver manufacturers, I think they're ripe for a rally. Very attractive valuation. Companies like Hindalco, not a buy recommendation. Or, you go into the chemical space, especially agrochemical, which is seeing lesser pricing pressure from China dumping now. And again, you have very large companies there in that space that are doing well. So there are plays that one can do while in the same rising market, which are not impacted yet by the frothy valuation. So the markets give opportunity, but investors will have to do their work to find these opportunities and add them to the portfolio with conviction.
Abhay, the other question that might be there is that if you want to play infrastructure, should you do it via ancillaries? Should you play it via pure play infrastructure, creating companies, or even for that matter, suppliers to infrastructure? Now, where cement and steel, etc., come into play. A lot of people are of the opinion that commodity upcycle coupled with the demand for cement might make cement a very formidable play for the next 12 months. Where are you on this argument?
No, I am with this argument. In fact, I would say both are good plays because the country needs 10x infrastructure of what is there right now, and now that you have a government in place that is very focused on improving that infrastructure and making sure that our infrastructure grows. Otherwise, the 8 to 9% GDP growth will just be a pipe dream. It needs to be followed up with action. So where are the opportunities for investors? As you said, Niraj, the infrastructure companies, but I would back only the very large ones which have the financial capability and the balance sheet capability and the management capability to execute those projects, because these are very, very big projects with a long gestation period, and you need companies that have the ability, financial and execution, to finish these projects. Otherwise, these projects can lead to a lot of pain for investors. And again, cement is something that I think now finally, because of the industry consolidation and the expected pickup in private and government capex, you will see some pricing power coming back with the cement companies. So I think cement definitely looks like a no-brainer. I would again advise investors to stay with large size companies there. Steel again has gone through its own issues over the last 1 year, but if the demand comes back for infrastructure, will be a critical part of that. So I think steel, cement, both are very important. Non-ferrous metals, again, very important element. And then the infrastructure developers themselves, I think all these should have a place in the investors' portfolio, those who are building a 3 to 5 year portfolio now.
Yeah, I wanted to get your take on the Adani Group stocks. I mean, they've, it's been a phenomenal day for the markets, but that one pack has definitely been a headliner. Of course, with all the standard disclaimers. But I want to get your sense of what is really working there. Would you say ports is most exciting play? And is this, in fact, the best possible or one of the best possible proxies for what we might see in a third term?
I would just extend, Tamanna, my last comment that I made. And, I think this group exemplifies good execution and financial strength, and is, I would say, at the right time, at the right place at the right time. And I think that is what is exciting investors about it. I'm not even getting into the history with Hindenburg and all. That is all done and dusted. And, hopefully somebody will ask questions to Hindenburg and investors who reacted to that report. But coming back to where we are and looking at the next 5 years, I don't see anybody else in the country having the wherewithal to build large projects and projects across not only just ports, but power, airports, roads, the entire infrastructure basket, that has to be built by a group that is seen as a nation builder and has been ahead of the curve. I mean, the same opportunity was frankly available to every other large group in the company, Reliance, Tata's, Birla's. We have so many of them with same execution capability, same financial capability. But if a group took the bet early on, took all the risks, went through the pains, and now is getting rewarded by the markets for their perseverance. So I think I would look at it again. Some of the stocks may seem expensive because of their recent run-up, but I would go back to looking at them, what they were before the Hindenburg and where they are now, flatline, and looking at what are the opportunities in the group beyond that. And ports definitely is one of the primary ones there.
Okay, Abhay, thank you so much. We extended our appointment by a little bit, but really appreciate it. It's just a day which requires so much of intellect on the screen because it's a difficult one to invest or trade with the way the markets have reacted. Really appreciate your time. Thanks for being with us.
Thank you, Niraj. Always a pleasure.
That's Piper Serica. All the people who've been invested would be laughing their way to the bank. I think the ones which have the biggest bang for the buck are the SIP investors. Retail has stayed invested through and through, and everybody who's done that is clearly very, very happy. The Nifty Bank, 5,800, knocking on the doors of 51,000. We take a break. We come back and try and ask two experts, Deven Choksi as well as Ruchit Jain, about what to do now with the rally already having seen a strong up move today. What to do now in the last half an hour. Stay tuned.
Welcome back. You're watching India Market Close. The markets are looking good. Gain of 3%, holding steady with that big rally that we saw from the get-go this morning. Well, what we do know is that before this big event, you had FIs that were short to the tune of 3 lakh crore rupees on the Indian equity markets, indicating that there is expected to be a pretty big rush in terms of short covering. Manish Singh, CFA and CIO of Crossbridge Capital, now joins in from London. Hi, Manish. Thanks for joining in. Manish, first to begin with, how were you positioned ahead of this big event in India, and were you short, were you long, and where do things stand today after what we've seen in the exit polls?
So we never do anything short, so we've always been more long. And our
so were you in cash or were you invested in India ahead of this big event?
So when we have exposure to emerging markets through ETFs, we don't change that. So for us, it was not an event that we were looking to take advantage of. It was more a confirmation that the positive view that you have on economic growth and political stability continue or not. It's more because when you have a long-term or medium-term strategy, when you're not leveraged, you are less concerned about the short-term moves. But when you're leveraged, then of course you are very concerned because that could change your position. So for us, we always take a medium-term approach, and at least from what I'm hearing from exit polls and the news, it seems that it is more a status quo, i.e. progression towards what we have seen in the last 10 years. And if that is true, then I think you will see the market continue to firm up and rally from here on when you get the final news tomorrow.
So you're saying that you want hedged, you were long India through ETFs. How does, with what we are expecting in terms of an outcome tomorrow, are you overweight India? Would that change your stance on India in a more positive way, or everything remains status quo and hence your view doesn't change on India?
So, see, I would say that, the economy is one thing and the market is another, because you really want to see a confirmation on the economy side. But because we are not doing India-specific investment only, it is more through exposure that we have through MSCI and other indices. Unless the weight in that changes, we are not going to make big changes. But what you do not want is any big surprises in an economy size of India, because that will have an impact on other investors and how that moves. So we don't do single stock in India. We only do through ETF when we take exposure on emerging markets. And for us at least, that stance wouldn't change. Somebody who is doing single stock, they may have a different view and they may be using leverage position to benefit from what comes out tomorrow. But I would say that, for us, we don't use leverage. We take a medium-term approach from the news going into the election and exit poll. It seems more a continuation of what we have seen in the past. So I do not see that as a big surprise or a big event which would change my view.
Manish, good morning to you. One question from my and Niraj here. Your investments, of course, are through ETFs, but you would have a view on an investment as large as India. Your view doesn't change, yes, but is that view constructive based on the fisc glide path and the growth, etc., that we have?
Yes, absolutely, because I think one thing we have to bear in mind that a lot of growth that is coming in India is very intrinsic. And you will see this around you when you see business people doing more business, people on new generation feeling they have to be more entrepreneurial, not just looking for a job, but looking to develop. And those are intrinsic factors. What really helps that is the cost of capital. So the cost of capital is very much a sovereign thing. That's what the government does politically, or how central bank manages inflation and interest rate. That has a bearing on cost of capital. Every sign that I see, the cost of capital will continue to come down, and that is reflected in the bond yields. When you look at the Indian government bond yield, dollar run, nothing else. So that is the macro story, and so you have to keep an eye on what happens to the bond yield. What is the market expecting of sovereigns when they're raising debt? And that becomes the cost of capital, then affects every business, whether you're small or big business, because everything's priced off that. So there, the political stability, the confidence in central bank managing inflation rates properly, and confidence finance minister managing economy properly, that stays. And the big thing for that is political stability. And this election, if it comes out that the BJP comes with 300 or 350, whatever number has been talked about, that is a confirmation and continuation of that the policy is not going to change. And they may be a bit more radical going into it. And I don't know if inheritance tax will be brought in or not. But if any more adjustment made to generate revenue for the government and use their capital for development, that can only be positive.
Manish, just one question from me here, Tamanna here. Taking forward that constructive view on the Indian economy, the next 5 years, cost of capital, etc., would it be fair to say that private banks is definitely one space which have a lot more steam left, and what are the other areas of interest that you would earmark?
Did you say private bank, Tamanna?
Yes, I said private banks.
Yeah, I think you're spot on, because if you look at the key parts to economy and which is where the banks that extend capital to economy can extend capital to companies, they become one of the engines through which these things are going to go. What I think, if I may point out, what is disappointing for India is that we have really not seen a big move in manufacturing, despite the focus that the government has had. Because if you look at the Make in India campaign, so much money and time was spent on that. If you look at the data level, that manufacturing hasn't shifted a lot over the last 10 years. And this is something I think the government should look to change, and why it hasn't happened, despite the best efforts of the government or business. And one has to find out why it doesn't happen. So that is the sore point, in my opinion, and where it needs investigation. But other than that, the intrinsic growth that India is going to have between 6 to 8%, and it is coming from the industrialness of the people. And well, I mean, if you get more educated, you travel more, you want more, you have better things to do. The investment on infrastructure side, the foreign companies coming in, taking stake in Indian companies and changing the way they work. I mean, those are just a work that keeps on getting better with time. So on that basis, I remain positive. In terms of sectors, I think the financials clearly, because finance is lifeblood of the economy, whether people like it or not. And I know the socialists always have a different view on what banks do, but without capital, nothing happens. It just stops. So the capital will be the engine. And then, of course, anything on the consumer side, because what happens when your GDP is going at 6 to 8%, and when people's consumer habit gets better or they consume more, anybody who then consumes a business, a consumer, and that is a large part of the economy, generally speaking, in many parts of the world, that will be major beneficiaries. And another aspect will be about infrastructure industrial, because we need to grow, we need to have these industries, and if you are linked to that by way of production or manufacturing, then you're going to benefit from it. But to me, the sore point has been that, in my opinion, at least, the Make in India campaign has not been a success, and India is still not a manufacturing powerhouse that it should be. And it is not because of wages have increased. The wages are still low. And if you look at China, the wages are much higher, but they have 100 billion of trade surplus every year. How do they do it? I mean, we have to think about that.
Yeah. There are a lot to be done in the next 5 years and further in terms of manufacturing. Point well taken. Thank you so much, Manish Singh, for joining us to give us, that global FII view as well. Ruchit Jain is now on the show with us, who is Deven Choksi. Let's get a sense of the here and now when it comes to the markets on this very exciting afternoon. Deven, let me start with you. And this confounding question, perhaps, and a good question to have, to see on what really can you invest in right now after the phenomenal run-up in most stocks today, especially on PSU, defense, railway. All the favorites are doing great.
Yeah, good afternoon, Tamanna. Well, I think this is not something which is very unexpected. Market euphoria, market momentum, everything has to be following the event. And that's what I think is happening. In my understanding, I think the people who have been buying into some of the names, definitely I think they are buying the momentum at this point of time. Even though the fundamentals of the companies are strong, the narrative is even different or maybe stronger than the fundamentals probably. So that's where I think the buying is taking place. Nothing wrong with it. I think generally if you convert this entire understanding into numbers, 2019 election time around, when the results were announced, in that particular week, the India weeks touched 30. This time around, India weeks is still around 20. In following 3 weeks thereafter the election played out, I think the weeks came down to 50. Out here, I think the 20 weeks could possibly go down to 10, 11, 12. So to a certain extent, I think this particular situation is normal. I think there is an euphoria in the market. There is something based on event. On the other side, if you look at the overall numbers, FIIs who have basically invested in India, they probably carry a position of about $800 billion. With the 3% up move in the market, I think they have got about $25 billion plus in the portfolio position. Against which, if they have got a $3 lakh worth of short position, which is nothing. Frankly speaking, I think that is not making any sense that they were to go the short covering, etc. Because that counts in some millions. I'm talking about the overall FI portfolio positions. So from that perspective, I think neither one should be getting carried with the short covering related stories, nor should one get carried with the narratives which have started changing completely post, I think, the exit poll results. All I would say is that I think currently the time is to look at some of the quality names, particularly in the large cap space, where the growth and the fundamentals are intact. And with this intact growth in the fundamentals, I believe that there is a long-term road ahead for these companies. So if one is getting convinced to buy, one should buy on the fundamental merits purely at this point of time. Otherwise, I think wait for some corrections as everybody would like to do so.
Ruchit also joins in with a technical view on the markets. Ruchit, what is the trade one can undertake for tomorrow morning?
Yeah, hi, very good afternoon to everyone. Well, the undertone still remains positive for the market. What we have seen that markets have seen a good amount of consolidation or a time-wise correction before the event. You just look at the uptrend which started from April 2024. The markets rallied towards 22,100, 22,200 till mid-January, and from mid-January till mid-May, there was a 4 months of period where the market consolidated with a narrow range. Although Nifty did form new highs, but it was still around that 22,400, 22,500 mark. So we have not seen any big gains on the index in last 4.5 months, which indicates that this was more of a time-wise corrective phase within the broader uptrend. And with today's up move, a good buying interest has been seen across the board. Of course, because of that event, but still it seems that it is just a resumption of that uptrend that we have witnessed a year ago. So I think positionally markets are still looking positive. There are a lot of questions coming in whether the markets have already rallied and no one has missed the bus. But I think still after this time-wise correction, it's hinting that positionally we would see a resumption of the uptrend. In between corrections would be there, but I think it's better to use any such corrections as buying opportunity. And from a very short-term perspective, if one is looking for just 1 or 2 days of trade.
Ruchit, help our viewers understand, if somebody wants to undertake a trade today, potentially a long trade on the index, would you recommend it? Maybe buying 23,500 calls could be an option. Maybe just a naked long trade on the Nifty. Is that something one can undertake today for tomorrow?
Yeah, I was just coming to that. So I think if one has to take a long trade or any trade setup from just 1 or 2 days perspective, then I think one should look to form long positions on the index. I won't recommend for taking fresh longs through options because now we have seen that India VIX is still around 20 and the IVs could decline further post the events towards 15 or 14. So that would shrink the IV. So if the IVs shrink, then the options premiums do not rise much. So I think if one has to take a trade, then one can create fresh longs on the index for potential targets of 23,500 to 23,600 range, and one should keep a stop loss below 23,050 on long positions.
All right. Any specific stock bets, Ruchit? Any STBT calls? Any calls for tomorrow?
So a couple of recommendations, but from just 2 to 3 days of perspective. So for very short-term trades, DLF is looking positive. After his recent corrective, the stock has taken support around its 100 DMA and witnessed a bounce back again. So keeping stock below 848, one can buy for potential targets of 900 to 910. And LIC is looking good. After some consolidation, the stock too is on the verge of a breakout from this consolidation, which indicates a resumption of uptrend. So LIC also can be bought at current levels with stock below 1040 for potential targets around 1127.
All right. We'll come back to more calls from Ruchit on an exciting afternoon. But Agam is with us, standing by for all the F&O cues. Agam, what's all the buzz about?
Well, naturally, a lot of things have changed since morning. Well, until yesterday, and rather until Friday, we were talking about 23,000. We're well above that mark. In fact, at the moment, we are also looking to potentially see 23,500, which is on the horizon, very close there. Now, the real question is that where do we go from here based on tomorrow morning's open? And I reckon that the first 1 hour trade, we'll start getting trends with respect to the outcome of the general elections, and a lot will depend on that until then, the India Volatility Index will remain high. And after that, we can expect the option premiums to contract to a certain extent once we have more clarity as to who the lead is with. But of course, in terms of today, there really isn't as much point to talk about how things have changed dramatically because we have an entire day left. If you consider the options market, in terms of the Nifty, naturally a lot of those 23,000 calls will have unwound in today's day of trade, and with that said, there will have been probably a little bit more writing coming through around the 24,000 mark, and this I'm talking about the 6th June expiry. Of course, we're still not too far away from the level given the kind of momentum that we've seen on the up move as well. You never know how things could eventually pan out, and especially given that tomorrow is the election outcome day. Even in terms of the Bank Nifty, a lot of things have changed. 50,000, which was a resistance, now becomes a support of sorts. It's the same for the Nifty. 23,000 mark becomes a little bit of a near-term support. And these are the levels that we are working with. Very quickly, in terms of the stocks too, very few red, a lot more green, in fact. And that's exactly what we have in terms of the gainers. Well, of course, longs in Gujarat Gas, PI Industries, Emphasis, Hindustan Copper, MRF, again on expected lines, even in terms of stocks which are seeing unwinding, you see it largely covering through, coming in. So a lot of strength in the markets today, and I reckon that once again, just like today, the first couple of hours will be most crucial in determining how things could pan out eventually for the markets.
Okay, we'll watch out for that. And just taking a leaf out of some of the things that Agam pointed out. Deven, good afternoon and thanks for joining in. What's the deal with some of these oil and gas names? I mean, it's very rare that you see GAIL, of all things, do the kind of moves that it has. Is it the belief of some measures like GST or gas coming in GST or a national grid being set up, or something specific that is leading to it? Or is it the PSU rally that might be rubbing off on GAIL as well?
Hi Niraj, good afternoon. Well, I think the narratives could be any and many. I think we don't have much control over the market narratives at this point of time. However, one thing remains fundamentally very clear to me, that what was not up till now happening, which has started happening in most of the PSU's case, is that government has become, I think, quite assertive on the performance of the PSU companies from their managers. Up till now, I think that situation was not existing. So that is the first point. Now, coming specifically to the oil companies, I believe that I think few things are probably making headways. One important aspect that each of the PSU companies, oil companies particularly, are having a separate agenda for creating the renewables within the company. So on one side, I think the conventional oil and gas business continues, be it in the business of distribution of gas or exploration in case of ONGC. The more important aspect out here is that each and every one of them are dedicating a separate resources towards the renewable segment. And that's what is keeping market more confident about that going forward, these companies are unlikely to miss out on the big picture which the country is talking about. And who knows, I think where the deal would strike, I think that is something which you and me would keep on guessing. But I believe that I think somewhere, I think these companies would be inviting some of the solid players, I think, to invest into them, and that could result into re-rating of these companies. At the same time, I think the valuation-wise, these companies are not so expensive as compared to their peers in the private sector space. So from that perspective too, I think a bunch of people, traders, would take a bet on those particular stocks, which is not very surprising to me. But all in all put together, yes, I think the allocation of money is increasing towards the PSU stocks, and that is what is driving the entire rally. Narrative could be any, as I said earlier.
Just before we get to Agam, just one quick, Ruchit, follow up there. I mean, a GAIL, it's up 13%. Some of the others like Gujarat Gas, etc., up 2-3%. Gas per se. Do you buy into them now? A GAIL, for example, in particular.
Well, frankly, I would recommend to continue to ride the trend if any existing positions are there. But for fresh buying, if I just look at the stop losses, then they are too far to take a new position. So not recommended to go for fresh long if you are a short-term trader. If you're a long-term investor, then I think one can look to buy some quantity over here and add if we get any dip. But at least not from a trading perspective, till we get any kind of good risk-reward ratio.
Okay, well, GAIL is not alone. It's been a roaring rally in the Adani Group stocks. They have recouped the losses that happened during the Hindenburg period as well. Agam now Johnson to talk about that as well, or rather, Agam has been staying back to talk about that as well. Agam, take it away.
Well, 16 months is what's taken the Adani Group companies to recoup all the loss in market capitalization since the episode with respect to Hindenburg. Since then, of course, we've seen significant expansion, a lot of improvement in the entire group metrics. Some of them include, long-term investors putting in nearly $10.8 billion in investment in the Adani Group companies. Even if you consider FY24 in terms of their profitability, we have seen their EBITDA rise by as much as 45% on a year-on-year basis for the entire group, coming in at little less than 83,000 crores. Their net profit has also risen a whopping 71% on a year-on-year basis on group level at around 40,000 crores and little over that. In fact, the core EBITDA in infrastructure, that comes in around well over $8 billion. And it's the improvement in the overall overall group balance sheet as well, which has actually, taken a lot of investors by pleasant surprise. That's where we're seeing liquidity in group cash balances stand at around 59,700 odd crores, a little over that. And the net debt is below 2.5 times with respect to its EBITDA for the first time. Again, another positive, especially when the entire sector, or rather related sectors, have seen significant headwinds. We've seen continued improvement as far as the Adani Group companies is concerned.
Right. That's, of course, the Adani stocks. Like I keep saying, they seem to be the supporting cast of today's session. But you know what's interesting is, as expected, the markets are growing closer to their opening high. We spent most of the day trading flat with a 3% gain, now inching closer to 23,300. 330 is what was the intraday high made on the index. So we're about 50 points away from our record highs. And it'll be interesting to see whether we close at that level. Very likely that the markets will make one more attempt to close at those record highs. Global cues, remember, have been positive, even though they've been inconsequential at this stage, but definitely worth a mention that everything put together is playing out quite well for the index. Even the private sector banks that had taken a bit of a break are back in the winning streak. Stocks like HDFC Bank are now trading with a pretty solid gain. I believe we have to go into a quick break. We'll go. Okay, no, I believe. Richard, you want to comment on private sector bank trades? HDFC is one that hasn't performed, interestingly, in today's trade. It's done okay. It's not done as well as the other names have. Is this a trade for the next couple of days, you think, or till 7 June expiry?
I think we can see some gradual pullback move to fill the gap area, which is around 1630 to 1650. So I think somewhere the price-wise correction is behind us, and then we are witnessing a pullback move after this recent corrective phase. So 1630, 1650 could be expected in the short term. One can initiate fresh longs with a stop loss below today's gap area, which is placed around 1530.
Okay, that's a view. Now, Devin bhai, what would you do now? I mean, if you had to put fresh money to work, where are those pockets? I'm presuming that you don't buy from a 3-month perspective. Where is it that you find risk-reward favorable?
So I think extremely convinced, Niraj, about the prospects lying ahead for the banking stocks and some of the large NBFC companies. Largely believe that if economy has to grow at 11.5-12% nominal GDP, I think some of these larger banks and NBFCs could possibly grow at 20% or even about 20% level. I think we have to be absolutely convinced about this particular possibility. Still, the rate of interest has not come down, and yet I think this growth has been experienced. So this will continue in the journey. So this is one area where we are confident. Second area where we feel extremely comfortable putting money in is in the area of automobiles and automobile auxiliary. Consumption space particularly, and because of the higher amount of capex spending in the economy and the corporate sector, including supply chain logistics area, I think the auto, particularly commercial vehicle, remains one of the favorite picks as far as I think adding into the portfolio is concerned. Maybe I think some of the valuations are adequately placed at this point of time, but I think companies like Tata Motor, which is sitting on the prospect of demerging the auto division, I think they could possibly be creating the higher amount of value for the investors. So selectively, we are looking at the companies which are there in the manufacturing as well, and maybe those companies which are part of the ecosystems of some of the large capital goods players. They are the ones who are suggesting they would be having relatively better time, given the kind of their customer segment producing higher amount of business for them. So selective, yes, I think, but these are some of the areas we like to stay invested in.
Right. Devin, I'm going to ask you a question from a long-term perspective for the next 5 years, because a lot of conversation tomorrow onwards will be the plan for the next 5 years, whatever the results are, and the results seem like they may be in line with what the exit polls are showing. So for our viewers, for investors, your top 5 stock picks for the next 5 years.
Thank you for that, but I think the situation is moving too fast probably. However, I think we continue to like the underlying story in the infrastructure space, particularly in the renewable infrastructure business, where I believe that I think the growth is going to be significantly higher. So unquestionably, I think that is one area where I believe that we will stay focused on. The second area, and I think the companies therein, as I was making a point, would be in the area of, I think, strong the banks and the NBFCs. We believe the likes of SBI, likes of HDFC Bank, even likes of Bajaj Finance, Geofin, they are all expected to double the size of their balance sheet in next 4 years' time, given the kind of lending program that they are assuming. So I would think that they would be the steady return providers in our portfolio going forward as well. What we would like to buy more systematically in the portfolio is those companies which are these are actually, I think, implementing the technology like AI and the blockchain in a systematic manner, where probably I think we see the larger amount of growth prospects, particularly the rate of growth for them, which would be significantly higher. So there would be selective approach, of course, and I think we will keep monitoring this approach on an ongoing basis. But this is the direction we assume for the portfolio investment.
Rajit, if you had bought any of those Adani stocks on Thursday, you'd have made a lot of money on Friday. If you bought them on Friday, you'd have made even more money this morning. Would you buy any of those Adani stocks today for tomorrow?
No, I won't recommend fresh buying, but if any existing long positions are there which have been bought at lower levels, then I think no such investors can or traders can continue to ride the trend.
And what about BDL, HAL, BEL? They seem to be on a little bit of a back burner today. These were the darlings of D Street for the last couple of months.
So maybe because these stocks have already rallied ahead of the event. BDL, if you see last 1 month, the stock had rallied from about 920 to 1500, 1600 levels. So there could be some relative consolidation before the stock resumes any kind of momentum. So the longer term or mid-term trend still remains intact, but just from a short-term perspective, because things have already, the stocks have already rallied before the event. So I think there could be some consolidation in the near term.
What I find interesting is how markets have stayed, completely secure over the 23,000 mark, and now looking like you're going to close near the day's highs on the Nifty. No real point at which there was massive profit booking on the kind of jumps and after the gap up that we've seen. If I were to ask you just a couple of stocks, Ruchit, one would definitely be SBI. What do you see for SBI on the charts? I definitely will ask you as well about Power Grid. Both of these are just fascinating today.
So after the quarterly results, we witnessed a good amount of consolidation in SBI. So I think one up move was due, considering that the stock was not breaking its important support of 40 days exponential moving average. So it seems to it has resumed its uptrend, and potential targets as per retracements are coming around 960 to 970 zone in the short term. So I think although it's up by 9.5% today, but still it has the potential to rally towards that 960 mark. So when one is looking to buy fresh, then I think at least a bit quantity can be bought even at current levels. Power Grid is also looking positive over here. The stock has formed a good support base around 310. So keeping a stock below at 310, one can initial fresh longs for potential targets of 370 to 375.
Okay, well, that's the long and short of at least the trade today. And it'll be really interesting to see what tomorrow shapes up. But Deven, Ruchit, gentlemen, thank you so much for taking the time out and being with us. Really appreciate your time this afternoon. And it's been that kind of a day wherein the markets have actually trended higher. We're closing actually at the high point of the day, if I'm not wrong. Can we pull up the Nifty intraday? Because we seem to be closing at the highest point of the day, and which is a good sign, 3.4% higher.
Close enough.
Close enough, yeah. No, but on the Nifty at the highest point of the day.
23,337 was a Nifty stay high.
Yeah, so just around. It's been kind of that kind of a day. So yeah, maybe a few points off, but clearly from the after the first 10 minutes, I think this is the highest point.
Yeah.
So which is actually a great sign from somebody who watches those kind of trends.
Nobody has taken anything off the table.
Nobody's taken anything off the table, exactly. And PSUs, the Adani Group stocks, and PSU banks per se, just having such a stunning move in the session from a BOB to a SBI, what have you, just been a really, really strong day. By the way, must not neglect infrastructure as an index. That one too is up about 5%, and the components of that index too would constitute some of the Adani Group stocks, I reckon, the Nifty Infra, but 5.5% higher, led by Adani Power and Adani Port, and then some of others like Concor, IRB Infra, others too participating. So a stunning show, really.
A stunning show all around and across the board. Now on a relative term, and really this is now nitpicking, I would say, but on a relative term, the broader indices, their light seems to have dimmed compared to what the Nifty and the Bank Nifty is doing. Bank Nifty really a stunner, because looking in all likelihood to close above 51,000 very, very comfortably. Yeah, there you have it. Very, very comfortably closing above the 51,000 mark today. So the big winner has been the Bank Nifty. If I were to earmark what have been the stars over there, and there you have the closing rates coming in. Let's pull up the components. SBI, I know you're seeing Bank of Baroda there right on top, but SBI nearly 9.5% up is just astonishing, to say the least, across the board. ICICI Bank, HDFC Bank, so all-round participation there on the Bank Nifty. In terms of the big movers, I would say today in PSU stocks as well, you should pull up and see what's happening to a power grid, where they are closing. REC, PFC, all your favorites have really come to the party today. So PFC there about 13.5% up. What a move on GAIL, Concor, NTPC. I think these are historic sort of jumps that you've seen on some of these counters, isn't it? And really, it's the funniest thing is that of all the people that we've been speaking to in the last couple of hours, there is no one who's come out and said that you might see profit booking now tomorrow. Yeah. They're talking about a possible further upside if the numbers are eventually even better than what the exit polls are seeing.
Yeah. In fact, I think all the bulls in the street will have sleepless nights. They won't know how and what to do. And of course, we wait in anticipation to come back to trade in tomorrow's market. It's been phenomenal, to say the least. We were expecting a 500-point up move. At least that's what it was indicating to yesterday. Implied Nifty gave us 800. The Nifty saw that open, consistent buying through the day was seen. And of course, we're closing in with a 40-point lower from intraday high. But record highs on the street. Number of stocks have made record highs in today's day of trade. The PSU index has gone home with gains of about 8%. The breadth of the market in front of you there was phenomenal. That's the PSU index, up 8% in trade today. The breadth did deteriorate a little bit in the last few hours of trade, but let's not forget it was defensives really that wanting too much attention or seeking too much attention in today's day of trade. You had healthcare, so pharma names, IP counters took a little bit of a backseat in today's session. On the winning side, apart from all your Adani names, PFC, REC, the Tamanna highlighted, GAIL, Central Bank of India, Bank of Baroda, Container Crop, NTPC, Power Grid, UCO Bank, in that order, were the top gainers in today's session. Jupiter Wagons, so anything to do with railways, did well. BEL was at buy call by one of our analysts this morning, Soni Patnaik. The stock managed to eke out sharp gains in today's day of trade. LIC Housing, oil and gas stocks, so ONGC, Reliance Industries, BPCL, HPCL, the whole host has had a good run. On the sell side, on the Nifty 50, like we said, you've only had 4 to 5 stocks. LTI Mindtree has been, there have been reports that they've been having issues with retention of senior management. I think that could be one reason that stock has just refused to participate. Asian Paints, Sun Pharma, Dr. Reddy's and Aisha Motors were your very few losers in today's day of trade. With what we've also seen, the VIX declined quite sharply in trade, but settling around 20. A lot of the premium and the pricing on all your 23,000, 23,300, 23,500 calls have also seen a substantial jump. So option traders, investors, tactical traders, I think everyone is laughing their way to the bank, guys.
And the big question about what kind of a day we're going to see tomorrow. Now, for sure, if you think that, wow, everything is done and dusted today, that's not the case. The excitement still is very much there, and we have a fabulous lineup for you tomorrow all day on elections, on the political insights, the policy view, and of course all the market action on NDTV Profit. It begins all of it actually from 7:30 a.m., but you can see all of these faces and experts from 8 onwards. So power-packed lineup for you on NDTV Profit. Do not forget to join in. For now, from the entire team here, thank you so much for watching, but stay tuned. A lot more coming up on the other side.